Will the US dollar break or bounce this week? That's what we're going to be taking a look at in our US Core PCE Preview for Wednesday. Hi, my name's John, Senior Market Analyst here at Anzo Capital, and let's get right into it. So what can we see going on with the US dollar at the moment? Obviously, price is in a bearish trend here, but could the market pull back this week? That is the question I want to ask ourselves. Now, we do have a lot of US dollar data coming up, but from a technical perspective at the moment, we can see that the market is starting to form a downward trend. We have these clear lower highs forming in the market and a new lower low. So the market for US dollar at the minute is leaning towards that bearish side, and that's been because we've had really poor macro data out of the US. However, there are some things that could potentially prop up the US dollar going into this trading week. Now, from a technical perspective, we are potentially now in what's known as the phase 2 of the trend. Now, when the market moves into a phase 2, we want to be looking for opportunities on a pullback. Okay, so when I look at this, let me just go to a clear bit of chart here. Sorry. And what we can look at is, what am I talking about when I talk about trend and I talk about market being in phase 1, phase 2, right? So the movements with the trend, right, are called phase 1, okay? The ones against the trend are known as phase 2, and so on and so forth. Now, when I am trading the trend, I am looking for the moment where that phase 2 turns back into the phase 1, okay? And at the moment for the US dollar index, it looks like we're producing a phase 2. The way we can find that out is by looking at our lower time frame, just to give us a little bit of an idea. So if I go to the 4-hour time frame, what we typically see in a phase 2 environment is one or two things. Either a series of higher highs, higher lows, right? Very similar to what we had here, okay, where the market was making higher highs and higher lows. And when that changed, we're back in agreement. We're back with the higher time frame trend. Or we get a situation where the market leans a little bit more sideways before seeing a continuation, okay? Now, for this instance, it looks like we're getting what we had back up here at the end of July, where the market looks to be making those higher highs and higher lows. So if that continues, we could be in that phase 2 movement, which means that price could be pushing back to an area of resistance where the phase 2 could turn into the phase 1 again, and we see a resumption of the trend. So from a technical perspective at the moment, US dollar index pulling back in line with the phase 2 of this downward daily trend. If we look at it from that daily chart perspective, you can see we consolidated, broke out, now we're pulling back. Are we going to see that continuation to the downside? Now, if price is going to pull back, what does that mean for other currencies? Well, obviously, if we go take a look at Euro US dollar, which is pretty much it is the inverse of the US dollar index, we can see we're currently trading above 1650. We came up into the 117 handle, rejected that 117 handle, and price is pulling back. So again, if we're in that phase 2, the market could be heading back to areas of support, perhaps 116.50, perhaps even into the 116 handle. And this is all just from a technical perspective at the moment. So let's go look at the macro driver behind this week. What's going to be driving US dollars? Now, first things first, we have a lot of Fed speakers this week. We also have Jackson Hole Symposium coming up, which is basically where all the central bankers get together, chit chat about the markets, chit chat about the economy, and sometimes give speeches. And sometimes those speeches can be market moving events, because we will have Jerome Powell, Fed Chair Walsh speaking at this meeting, at this Jackson Hole event. So before that, we have Core PCE, right? So here we can see Core PCE price index year on year. And that is something that we're going to be watching very, very closely. This is the preferred measure of inflation by the Federal Reserve, or was at least before Fed Chair Walsh came in. And the reason why it is that is because it shows genuine consumption from consumers. It shows genuine demand. If core PCE inflation rises, then that means there is genuine demand in the economy, and that could lead to higher prices. Higher inflation means prices could rise to meet that demand. And what we're expected is to see a forecast of 3.3%. So we're expected to see unchanged. Previous was 3.3%, forecast is 3.3%. Now, when you look at the minimum and maximum of this, 3.3% is still technically a high reading. So if we say, or if we see 3.3% on the core PCE price index, that is going to be very, very bullish US dollars. It's going to be bullish US dollars because it means that inflation is sticky, quote unquote, and sticky. That means that the Fed Chair Walsh may be like, we've still got to wait to see how things play out. That could change the price when it comes to the CME Fed Watch tool as well. Now, what's interesting, if we come in at 3.2%, that's on the low side because it shows that that demand is starting to ease a little bit. And that in that, we could see a little bit more of downside and a continuation for that US dollar weakness. So in other terms as well, other markets could feel the impact of that. So we've talked about in the past how it's going to impact potentially gold, right? If we look at gold prices at the moment, gold prices have been flying higher, and it's just come into a strong level of resistance. If I just put the market profile on from the swing high down to the swing low, we've just come into this major level of resistance where all this volume was in the past. So it looks like we've tapped into kind of like that 4,690 area, starting to see a little bit of a pullback now. Now, if we go into the 4-hour time frame, there's nothing to suggest here that the market's pulling back just yet. So we need to wait a little bit longer. But if we were to get some kind of like, let's say, market pullback, rally, fail at this level again, break and move to the downside, then potentially there could be that phase 2 pullback even for gold, and we could be looking for markets to come back down into this $4,500 level. Now that would be nice because I think the macro really supports gold being bullish, but I don't want to buy it at these levels. I want to see price pull back into better levels first, especially as a swing trader, in order to try and capture onto this move. So that's really what we're going to be looking at going into this market event. How will the market react to the US core PCE price index? If we see a hotter number, that is dollar positive. So that's going to be the likes of gold down, stock markets down, etc. If we see a weaker one, that's dollar bearish. That's going to mean gold's probably going to continue to the upside. We're going to see a bit of a turnaround in the stock markets as well. So hope you enjoyed that video. If you did, leave it a like, subscribe if you're new, and I will catch you in the next one.